So, Khalisa, you have done so much for, for the capital market with reference to regulations. So, I have two areas where we like to hear your views. Is a SECP has definitely done so much in terms of forming regulations for the capital markets. But what do you think where the regulator need to emphasize more or probably is lacking to create a more robust capital market? And secondly, one more area which if you can ponder upon is that the number of retail investors in Pakistan capital market or specifically the stock exchange are very low. They are roughly 280,000 UINs and probably a fraction of those are actually active investors. So what should be done to increase the retail investor base in Pakistan?
Badla. They had some systemic issues. In the year 2002, 2003, Arif has gone, but most of the systemic issues were removed from Badla, except one small matter which could have been dealt with. But no, because somehow we associate, yes, the origins of Badla are in the unofficial market, I know, so you have that unsavory aspect of Badla. But the problem is we regularized it. Now work with it. At that time, the amount of trading that used to take place in our market, and which is where people, when they invest, they can sell into, okay, was the envy of Southeast Asia. When I was working in the World Bank, and I was the World Bank's big honcho for financial sector, private sector development in East Asia, the Chinese asked me, what is this Badla? Okay, and I was just leaving the World Bank. I said, I'll send you Arif Habib and people like that to tell you what it is. Okay. Then, of course, they went a different direction. India did away with Badla, but replaced it with margin financing. Okay. We have not been able to do that because in India, the Reserve Bank of India ordered the banks to provide margin financing. Margin financing is non-recourse finance through brokers. Non-recourse. Okay. Our banks will not do it. I've asked the banks, they won't do it. And I don't blame them. Okay. So they don't have that incentive to do that. So we now, fundamental to the working of any stock market is trades, transactions, liquidity. That is what encourages new issues to come. Because the people know that if I list my stock, it will be valued. And if investors invest and they want to, exit, they can do it. But our market, this trading has got constricted. Okay, it's really, our market now is only 13% of GDP. The kind of norm that you have is about 100% of GDP. And the Indian market is more than 100% of GDP. I remember way back in 1991, I worked on the Pakistan market and in the Indian market. The Indian market was 7 times the size of our market in market cap. Our trades, or the Indian trades were 4 or 5 times our trades. Now their market is more than 100 times our market, and their trades are 40 to 50% more, our trading. What have we done? We have hit ourselves on the foot again and again and again. That's what we have done. So, we have only ourselves to blame for that. And I'm not necessarily going to criticize the regulator, although the regulator has a lot to answer for, and so has the government a lot to answer for. Okay, but that's not what I'm going into right now. I may in a couple of minutes because of the second question that you've asked. So what should we do? You need a sound, another thing which I forgot to mention, onerous regulations. The regulations are so onerous. If you want to do an issue, or if you want to do anything, you are faced with those regulations. Now, there has been slight change, as Shamon mentioned, in the attitude of the regulator. But we are talking about after 2002 or 2003, the regulator in its attitude and mindset has gone like that. Okay? They become nuisance value oriented. They become highly bureaucratic. They raise issue upon issue. Only the other day, somebody had to file a Form 29 And it was a very simple matter. I'm a regulator, I know. It was nothing in it. They kept asking question upon question, raising issue upon issue, which were totally pointless. That's what is. So you think anybody will want to go into this market? Anybody will want to list in this market? I was very much taken by what Mr. Taba has to say. He talked in terms of going abroad, and he talks in terms of how there is much more that he can do, and it is bully to him that he's been able to do that. I wish other people would follow that model, because in our market right now, if you ask me what should be done, first you want a sound regulatory framework that is not onerous, that really takes into account what is needed. You see, the way in which the SEC regulates, as I've seen, I've been on the policy board now 4 years. First, they say that the person I'm going to regulate is one big thug, and I'm going to produce my regulation on that basis. Secondly, I don't know what I'm doing. Say there's the mutual funds. I'll have a huge capital requirement that creates a barrier immediately. So neither do they know, the capacity is not there, plus the attitude is that the people in the market are chores. So how regulation has to be made for ordinary people. And the other thing which is weak about you asked about our regulator, their big weak point is enforcement. And I think the chairman himself will admit, Chairman at SECP, that enforcement is a big issue. Because anything you ask him to do, and I say, well, the answer is in enforcement. He says, wo to hamari hoti nahi. Then what can we do then? That is your main function, right? So what we need is a sound regulatory framework. We need to promote, and that's a big question, robust, broad-based investment banks. We need to strengthen the market's regulatory framework through setting up of competing stock exchanges and other types of trading platforms, and also competing support institutions. Then you might find that something can happen. But there are blocks. Yours truly tried to set up an ECN when I was leaving the SEC, this way back in 2003, and with the support of the Asian Development Bank and also with one or two market players, I was doing that. They went to court. All these stock exchanges went to court. And guess what the government did? The Attorney General went in court and said that we will deal with this matter, this will not. And I had left, but the order from the Ministry of Finance was stop it. And there in India, I took all the All India institutions, they set up the National Stock Exchange, which gave tough competition to the Bombay Stock Exchange. So we have a big problem here. Now, you were talking about the regulator, and I've told you about the mindset of the regulator that needs a radical change, okay? But how do you do it? But the problem is that the regulator is also risk averse. The problem is that the regulator is not independent. I'm saying it advisedly in this forum. It is a subsidiary of the Ministry of Finance. If the Ministry of Finance says jump 2 feet, they say, no, why 2 feet? We'll jump 3 feet. I mean, that is the real situation. The policy board, okay, which I've been there 4 years, the first 2 years, it was the reconstructed policy board. It actually worked and did a lot of good work. After that, 1 year, it was abysmal. And the last 1 year, it's been, the correct word is dysfunctional. Only 3 meetings have taken place, and the only thing they've done is emergent matters. So we have to, we have to see. Now, you want me to tell you something more about the regulators, I'll do it. But you might think that I'm talking very emotionally. You might think that I am, actually saying things which I shouldn't. Actually, I can say a lot more. I'm actually tempering it. But what I said, okay.
Thank you, Khalid sir. Yeah, we have